By the end of this video, you will be equipped to navigate, digest, and derive conclusions from the financial statements of whatever company you are looking to analyze. By no means is this video or any other video like this on YouTube all encompassing. However, there is no other piece of content out there that will teach you more about financial statements in less than 10 minutes. I'm going to touch on three of the financial statements and then tie everything together towards the end. So let's start with the income statement. The income statement reports the revenues and expenses of the firm over a period of time. The income statement equation is revenue minus expenses is equal to net income. Let's look at an example. Here is the income statement for Microsoft for the year ended June 30th, 2023. Hence, this number of 211,915 is the amount of revenue that Microsoft generated from July 1st, 2022 to June 30th, 2023. The other line items on the income statement down to operating income are pretty self-explanatory. For example, sales and marketing year means that Microsoft spent $22 billion on sales and marketing for their products and services in that year. Feel free to leave a comment if one of these items do not make sense. I will be extremely active. Essentially, you are looking at what the revenue numbers are, how fast the revenue is growing, what the margins of this company are, and then you're taking those growth rates and margin percentages and you're comparing it to the competitors of Microsoft. Next year, which is super important, is the earnings per share. So the earnings per share of Microsoft for the year ended June 30th, 2023 is $9.72. And the diluted earnings per share is $9.68. So the earnings per share is calculated by taking the net income number and dividing it by the shares outstanding. What is the difference between basic and diluted shares outstanding? Google that. Honestly, it's really easy, but kind of too much to get into this in this video. Next, let's move on to the balance sheet. The first thing you need to know about a balance sheet is that it is organized into three sections: assets, liabilities, and shareholders' equity. Assets is something that the company owns. This could be cash, property, machinery, inventory, etc. Liabilities is something that the company owes, like loans. The basic accounting equation is assets is equal to liabilities plus shareholders' equity. Let's go back to Microsoft. The first line item here is cash and cash equivalents. Cash is pretty self-explanatory, but cash equivalents are short-term securities that the company is holding, which can be easily and immediately turned into cash. Analysts want to look at the true cash of a company. In order to calculate true cash, you take the cash and cash equivalents number and you add marketable securities. Different companies provide different names to their marketable securities, but that is nothing to be worried about. Marketable securities can be equity investments, bond investments, and other short-term investments. For example, Microsoft's true cash here is calculated by taking this cash and cash equivalents number of $34 billion, adding the short-term investments number of $76 billion, and this equity investments number in the non-current portion of the assets of approximately $10 billion, which will give you the true cash of Microsoft. There's a bunch of reasons why companies hold a lot of cash on their balance sheet. Some, like Microsoft, make tons of money and don't know what to do with it. Some will pay dividends, some will repurchase shares, some will spend money on capex or acquisitions. One can understand the motivations of a company by understanding how they use their cash. One example is that if a company repurchases shares, Apple is known for doing this, it is an indication that the company believes that their share price is good, or at least good enough for them at that point of time, and the best way for them to use that particular amount of cash at that point of time. Next, let's look at accounts receivable. Microsoft here has an accounts receivable balance of $48 billion. Accounts receivable is essentially the money that Microsoft has billed for but not received yet. And accounts payable is the opposite. Next is inventories. Inventories are pretty self explanatory. Microsoft here has inventories of $2.5 billion. Now, how do you look at inventories? So, when it comes to inventories, you want to see how the levels are shifting. Are they increasing too much, too fast? That could mean that the company may have issues selling their stuff as fast as they expected it to sell. That's not a great sign. Next, let's look at PP&E. Microsoft here has a PP&E of $95 billion. This is pretty self-explanatory. It would be things like machines, buildings, land, etc. that the company owns. PP&E are assets that the company owns that typically have a life of more than 1 year. Just like true cash, you want to know what a company's true debt is. True debt is calculated by taking the current portion of the long term debt, adding it to the non current portion of the long term debt, and commercial paper. The true debt of Microsoft over here would be taking the long term debt of $41 billion, adding it to the current portion of long term debt of $5.2 billion, and that would give you your true debt. There is no commercial paper here on Microsoft's balance sheet for the year ended June 30th, 2023. The company's net debt is the true debt minus the true cash. The investment industry pays attention to a company's net debt in several ways. They compare it to sales of the company, or the cash flow of the company, or the EBITDA of the company. For example, if a company has $10 million in cash flow and $20 million in net debt, they are doing just fine. However, if a company has $10 million in cash flow and $100 million in net debt, they are probably in a really bad spot and about to go bankrupt. The cash flow statement summarizes the amount of cash that enters and exits a company. At the end of the day, the amount of cash a company generates is the primary fundamental driver of the stock price of a company. The cash flow statement is broken down into three distinct segments: operating activities, financing activities, investing activities. As you can see here on Microsoft's cash flow statement for the year ended June 30th, 2023, the cash flow statement begins with the net income from the income statement. Then the cash flow statement adjusts for non-cash expenses like depreciation and amortization, stock-based compensation, non-recurring expenses, and operating capital changes to arrive at the cash flow from operations. Next is cash from financing. As you can see here, Microsoft spent $22 billion on purchasing their own shares and spent almost $20 billion on dividends. Cash flow from investing paints a picture of how the company is investing into their business. Microsoft here spent $28 billion in new property, plant, and equipment, $1.6 billion on acquiring new companies, and so on. That's it. So that's the end of this video. Now you have a robust foundation in financial statements, and you can go and continue and do your own research and build upon the things that you've learned here. Please like, comment, and subscribe, and leave some comments if you don't understand something. I will be very active. Thank you.